Okay, hi everyone. This is James Simpson from Apollo Capital, and this is our interview with Compound, a really exciting new project that we're helping out with a bit of initial liquidity. And I'm sitting down with Robert, who is the co-founder and CEO of the project. Compound is a decentralized protocol which establishes money markets with algorithmically set interest rates based on supply and demand. Which allows users to frictionlessly exchange the time value of Ethereum assets. We find that this is one of the most exciting projects that are building out the financial ecosystem in crypto. And we're really excited to sit down with Robert today to discuss this. And I suppose I would just like to begin with you just doing a quick intro of who you are and how you came into crypto, and then finally how you began Compound.
Thanks, James. So to start with, I'm probably the most skeptical founder in crypto about crypto native assets and about a lot of the financial markets that exist in crypto. My background is I started my career as a professional economist. I worked at a bank and then in private wealth management as an economist, and at some point became a software founder out in Silicon Valley. I originally brushed off Bitcoin when I first saw it. I remember vividly reading the Bloomberg headline, Bitcoin reached parity with the US dollar when it hit $1. As an economist, I was like, oh, you can't make up a money supply. This is headed nowhere. Obviously, I was proven wrong. I remember when Ethereum came out, I said, oh, this is so monumental. There's no way that it can ship the Ethereum blockchain. It's just not going to happen. I was proven wrong again. I was blown away by how successful Ethereum actually was in its launch in early days. And I came to crypto somewhat reluctantly. As you can tell, I'm not somebody who's fervently embracing every aspect of it, saying this is, the entirely new world. I look at crypto in a lot of ways from the lens of the old world as a former economist, understanding how existing financial markets work and where they're headed. And what got me excited about building a protocol on Ethereum was actually the fact that there's a lot of financial tools that don't yet exist. And at Compound, we're not trying to reinvent the way that the world works, really. We're trying to migrate some of the best pieces of existing financial markets onto the Ethereum blockchain so that they apply to new assets and tokens. So that's really how we got here. And for the past year, our team has been building and has been focused on shipping a protocol that creates a spot interest rate market for crypto assets. And it's been a lot of hard work. There have been very few teams that have shipped a live protocol on Ethereum. And so, we've learned a lot, especially about how math works and how smart contracts work to be able to get to this point. But we're about a month away now from shipping Compound, and it's an extremely exciting time. And so far, we're thrilled to have partners like Apollo Capital and a few other crypto native hedge funds that are looking to work with Compound. And it's a really exciting time because, for the first time, we expect there to be frictionless markets for the time value of Ethereum assets. Right now, if you are looking to actually borrow or lend a token, there's a lot that goes into it. You have to negotiate an interest rate. You have to negotiate credit, essentially collateral. You have to negotiate duration, and you have to find a counterparty with the exact opposite view of you at the exact same time.
I wanted to touch on this. I know there are some projects out there like Dharma as an example, which I've used in the past, which is a peer-to-peer lending market. And then there are other ones like Maker, where you collateralize Ethereum and then pull out a stablecoin DAI. I'm interested in understanding where Compound fits in this kind of lending money market ecosystem.
Yeah, absolutely. So in reality, Compound bridges the divide between people who don't have an asset and people who want to borrow it, who want to use it. There's three reasons why anyone would want to borrow an Ethereum asset. One is to be able to use it as it's intended. I might borrow Ether to power a smart contract or to actually execute a transaction. I might borrow a token so I could use it in its intended protocol. Somebody might want to borrow ZRX or Basic Attention Token or Augur to actually use those systems. Or they might want to borrow an asset so that they can short sell it and purchase another asset with it. And in terms of how Compound exists alongside Dharma and Maker, it's actually really interesting. In Maker, you're really borrowing from yourself. And you're not, the economics really, are neutral. There's not really an interest rate that, flows between one pocket and another pocket if everything's working well. You're basically creating DAI and borrowing from your own Ether supply. So that's really interesting. Like, that does solve some pretty profound use cases. I think DAI is one of the best projects in crypto. I'm extremely excited to watch them scale the DAI ecosystem. And it's really less about two different people with opposite views and more about you creating a new asset for yourself, which is really phenomenal. In Dharma, I think there's absolutely a use case for duration-based loans. If you look to the existing financial markets, there's always going to be counterparties who negotiate fixed income instruments that have a duration, whether it's a day or a month or a year or a decade or 100 years in some cases, that are very specific. It's the way that corporates issue most debt. It's the way that sovereigns issue most debt. There's always going to be a huge market for fixed income. Where Compound fits into this is that we're basically a spot interest rate. There's no duration in the Compound protocol. You're not supplying an asset for a specific period of time, such as a month or a year. You're supplying it for however long you want to supply it for. It's less like a bond or fixed income instrument or loan, and more like a money market, where it's fully liquid and there's no commitments on either side.
So yeah, can you explain that? So I know that I think I'm right in saying that the interest rates on Compound are determined algorithmically by supply and demand.
Right.
So how does the maturity rate work? Can you so you said just before, I think, that there isn't a fixed term. Is that right?
So that's a great question. So the interest rate floats in real time, and it's continuously compounding interest rate. So the interest rate on Wednesday might be 4%, and the interest rate on Thursday might be 4.1%. And every day the interest rate changes. And that's an annual interest rate that I'm quoting. And so every hour and every minute and every block, you're basically compounding a very small amount of that interest.
Okay.
And interest rate is what's actually being negotiated based on the amount of capital being supplied and the amount of capital being borrowed in the protocol. So when borrowing demand is very small relative to the supply of assets, interest rates are very low. When no one wants to borrow, the interest rate is low. When everybody wants to borrow the asset, the interest rate is really high. And there's every point in between. And that's what the Compound protocol does, is it gets to an equilibrium interest rate based on supply and demand, such that if the market thinks the interest rate is too low, they're going to borrow. And if they think it's too high, they're going to supply assets or they're going to repay their borrows. And what we get to is an equilibrium that is efficient, but without all of the friction pieces that go into a lot of lending markets.
Yeah, so you don't have to kind of negotiate terms on a peer-to-peer basis in order to create or take a loan. It's kind of just a fair market rate.
That's exactly right. You simply say, I want to supply this asset in this quantity. That's it. Everything else is handled by the protocol.
Okay, and it isn't a fixed term. You can leave whenever you want. Is that right?
Yeah, that's exactly right. So you could supply 10 basic attention tokens at 5:45 on a Wednesday, and at 10 p.m. tonight you could withdraw those plus a tiny amount of interest.
Okay, yeah, that's interesting. So, and like, how does that work? I mean, and like in terms of the kind of liquidity issues, it sounds like it's a common liquidity pool.
It is a shared liquidity pool. So every user is actually sharing liquidity in a open source audited smart contract. It's not maintained by our company. It's not maintained by anybody. It's simply a smart contract with very specific and transparent rules that are open source. And so it's basically a smart contract that's facilitating this market.
Right. And is there presumably there would be separate pools of liquidity for each crypto asset?
That's right. So for each asset, it's its own pool of liquidity. So the interest rate in the basic attention token market might be very different than the interest rate in the market, for instance, because each one of them is its own pool of liquidity with its own supply and demand.
Oh, that's super interesting. Um, and I mean, I suppose this is probably a good time to explain what you're doing with some crypto funds, including us. Could you just kind of explain how perhaps the funds are helping out?
Yeah, so we like to think that there's something for every type of hedge fund. And every fund has a different strategy. So for funds that are long only, Compound is a phenomenal source of incremental returns. Even though crypto is extremely volatile, earning an extra few percent is always better than not earning an extra few percent, period.
Right.
Especially for assets that are meant to be liquid and you're not planning to just immediately trade out of them. If you're holding a balance, we can offer incremental returns through this protocol. If you're looking to deviate beyond just long only, if you're looking to have a long short strategy or a relative value strategy, or if you're looking to short sell an asset, Compound's protocol allows you to borrow assets trustlessly without having to find a counterparty, without having to trade on an exchange, which I'll be honest, I've been around for a while. I've seen a lot of exchanges go down. It's a way to trustlessly borrow an asset for a short sale. And that unlocks a whole new range of opportunities and strategies for investors. The third use case is it can also unlock additional leverage. We've spoken to a number of funds that are actually looking to borrow stable coins and borrow Ether from the protocol so that they can actually increase the amount of leverage they have to a specific asset. We're partnering with a number of different funds. Apollo is one of 24 that we've partnered with that are providing liquidity at the protocol's launch. So we're supporting 5 markets when we launch: Ether, TrueUSD, Basic Attention Token, ZRX, and Augur. And we're allowing investors to participate in our markets as soon as we launch. So in any of those markets, people are able to supply assets or borrow from the markets.
Yeah, that's a really great way to bootstrap liquidity. I think just get funds who have some obviously assets lying around. So it seems like a win-win, and we're very happy to be involved in that process.
Well, to have you guys. I mean, I think most projects haven't really put as much time and attention into their launch strategy. We've seen a lot of things ship without really much usage at all. It's a very hands-off approach. We're hoping one of the first times where it's a very hands-on approach, where we can really bring together the largest, most interesting users, and
yeah,
perfect protocol.
Absolutely, I think it's really exciting, and for us, we've at Apollo, we've always thought that smart contracts, the low-hanging fruit for smart contracts, derivatives and financial contracts. And I think the ability for a smart contract to enable disparate parties to trust each other in a financial agreement is super powerful. And kind of on that note, I was interested in hearing a little bit more about the roadmap going forward with Compound and the kind of assets that you hope to put on the protocol, whether they might be security assets, whether you think at some point even that real world assets could be tokenized and put on the platform. I'm interested in kind of how the kind of future outlook is.
Yeah, that's a great question. So the first 5 markets that we're supporting are the ones that are farthest away from being securities. We're looking at pure utility tokens, Ether and a stablecoin. We're really excited about a future in which most securities are tokenized. When eventually Apple stock is a token, 10, 20 years from now, when everything is crypto, and that day is going to come. For right now, most things aren't crypto, and we're taking a relatively cautious approach, where we're looking at the most widely understood assets that are useful today that you can use in protocols that have been deployed and have shipped. And it's a small field. We're starting with a limited number of assets that we support for exactly that reason. There's not enough protocols that have shipped, and the tokens are usable today. But I think the number of protocols that have a useful token is going to be increasing over time. And I think the number of assets that come to the blockchain is going to increase over time. There's going to be more and more live utility tokens, and there's going to be more and more pure security tokens. And we're going to evaluate very carefully which markets we add, but that's a huge opportunity for growth for us, is supporting more and more assets. And interestingly enough, the more assets we support, the more useful Compound is.
Yeah, I couldn't agree more. I think that what we're seeing is a glimpse of I mean, would you agree that we're seeing a glimpse of a new financial kind of ecosystem in the world economy? And these kind of projects, they're beginning with crypto assets, and I think the potential is much larger than the kind of usability that we're seeing currently. So I think that's really, really exciting. I was also interested in hearing about the governance structure. I know that it's beginning to be centralized, and you have plans to become a DAO at some point. I was wondering the kind of rationale for that, and kind of how you see that process panning out.
Yeah, so that's a great question. So when Compound's protocol launches, we're going to have a very minimal footprint in the protocol's operations. So day zero, when it launches, all of the hard work is going to have been done by a company that's really designed the protocol from scratch. And a lot of hard work has gone into building Compound. And when it goes live, there's a few pieces we're going to continue to operate. The first one is actually on the pricing oracle, where we're going to be posting asset prices to the blockchain. It's one of the only responsibilities of us as a company and as an organization that sponsored this protocol that we're going to have post-launch. And the second is in calibrating the interest rate model. The interest rates in Compound are defined by a model which we're going to have initially set, but is open to revision. We're going to take into account all of the feedback from the community, from our users, and from all the different participants to calibrate those rates. Long term, we don't really want to be in the business of posting asset prices and calibrating rates. We actually think that the community can do that in a much better fashion than a centralized organization. And so our goal is, over time, to decentralize everything about the protocol and to be able to fully step away and not have any one organization that's even involved in administering Compound, having it be truly decentralized, so that it can be governed really by the users, by Apollo, by all the different large and small hedge funds that are using it, by the power users, by putting that power into a lot of hands, not just ours.
Yeah, that's really interesting. I mean, I know that Maker, for example, has an Oracle, and I think and a governance system with their Maker token, and you have to pay the platform fees with that token.
Yep.
Can you see a future where you mentioned that the Oracle might be decentralized at some point, but can you see a future where you have a token, and can you explain why you perhaps began without a token?
So we have a very contrarian view, which is that most tokens just add friction to the underlying protocol. And most teams are actually issuing tokens as a tool to raise capital, not because the protocol is better with a token. Most protocols that you look at, I think, are better if you take the token out. There's very few that are better because they have a token, and the token truly solves a problem that couldn't otherwise be solved. With Compound, we've tried to design it to be as frictionless as possible. There's no utility token required to operate Compound or to pay fees. There's no barrier between you and this smart contract. And I think that's really powerful because it makes it easier for people to use Compound. And that's our goal, is adoption and usage. Eventually we might have to have some voting mechanism to oversee the governance aspects of it. But to start with, we've decided that, there's really no token because there doesn't have to be a token.
I think that's, actually this week, Apollo Capital came out with, in our newsletter, we had an article entitled "Your ICO Doesn't Need a Token." And we think it's really fascinating to see so many ICOs out here that graft a token on for no other reason than fundraising. Right. And they kind of say that it's a utility token that can pay for services within some sort of economy or claimed economy that doesn't yet exist, by the way. So we a lot of those kind of projects are easy passes for us and for other institutional investors. So we were actually really happy to hear Compound come out and say, you know what, we don't actually need a token, because it is obviously harder to raise money without one.
Much harder. I think it's it's one of the reasons why people are lured into this token model, is because it's so easy to allow anyone anywhere in the world at any hour of the day to give you capital.
Yeah, right. So I mean, can you explain? I think it might be helpful for other projects who are starting up and who are thinking about their token model and whether they need one or not. How have you guys raised capital for your project?
So Compound is venture funded. So we raised capital from Andreessen Horowitz, Bain Capital Ventures, and Polychain Capital. And they basically provided us the resources necessary to build an engineering team and ship this protocol to the world. They are phenomenal investors. I think, they're investing in, at this point, some of the top projects in crypto. And, they're very rational in that, they don't expect that every team has a token. I think they share your view, which is it doesn't always make sense. And they were very enthusiastic about a company that recognized that, because right now most teams haven't come around yet.
Yeah, that's fantastic, and they're great backers to have. The other question I just wanted to touch on is in the white paper in section 2.4, you mentioned a chief economist.
Yeah.
Could you just explain that concept?
Yeah, so that's really how we think about the governance of the interest rate model. And it says that the chief economist can be an individual, an organization, a DAO. There just has to be an address, an Ethereum address, that's responsible for updating the interest rate model. When we launch, our company, in participation with our investors, is going to put together a preliminary interest rate model. It says, what's the curve of interest rates? How quickly do they rise or fall, depending on different parameters. But over time, we actually want that function to be provided by the community. Down the road, if this does become decentralized and distributed, there could be elections for a chief economist. There could be different parties coming together to collectively a lot of different opportunities.
That's super interesting. I just really just want to briefly touch on the migration to a decentralized model. I mean, is that something that you think will be difficult? Because I know, in the US, relatively recently, they came out with saying Ethereum isn't a security because it's decentralized. And I know that a lot of projects that we talk to are kind of planning a self-destruction of the business behind it, or the entity behind it. But I haven't actually seen many projects go through that decentralization process, and I'm just wondering how you guys are thinking of doing that.
It's still in the early stages of planning. I don't have a clear path yet, and we don't expect that we're going to be the first. There's a lot of other projects, talking about this process, and so I think our goal is to be able to follow best practice when the community comes up with the best practice.
Yeah, that's fair. And do you expect applications to be built on Compound?
We do. The great thing about Compound is it's entirely on-chain. A lot of other protocols have an off-chain order book or off-chain component to them. Compound is entirely on-chain. And so the smart contract ABI is accessible to a user, to a web dApp interface, or to other smart contracts. It's possible for anyone to build a smart contract that talks to Compound, or to build an application on top of Compound. It's trivially easy. We're starting to see a lot of interest from developers to integrate Compound into wallets, into new applications, into different things that they're doing.
So can you, at Apollo Capital, we kind of see the future being, tens of blockchains, and then having kind of hundreds of middleware layer, oracles, stable coins, so forth, smart contracts above that, with and then millions of applications. Do you kind of see Compound as the money market protocol for the crypto ecosystem?
Yeah, we do, as it relates to Ethereum. So there is a lot of blue ocean ahead of us in terms of where does crypto move towards. Is it going to stay on Ethereum? There's a strong case to say that it will forever. Is another blockchain going to become the dominant platform for new token assets to be issued? There's a very strong case for that side as well. When it relates to Ethereum, we plan to be the layer that other people can build on or interact with directly. that becomes a de facto standard of sorts. Just like 0x is becoming a standard for trading.
Yeah, okay. So would you ever migrate to a different protocol if say, there's a future where Ethereum doesn't scale, or there are other maybe governance issues, or
It's too early to say, just because no other blockchain really has the operating experience as a smart contract platform that Ethereum has. I remember looking back at the first couple months of Ethereum, and it was woolly. I think you're seeing that right now with EOS. I think you're starting to see that with Tezos. I think we're going to see like one or two blockchains make tremendous progress and start to attract developers and token issuance and financial services. And we have the luxury of being able to watch and to observe where that growth is occurring. We don't have to get too early.
Yeah, I think that's a really good. I think that's a good way of thinking about it. Just one last question on Compound and how it relates to other projects in the ecosystem. So in DYDX, they're planning to enable people to buy tokens, like a short token that relates to, say, short XRP with Ethereum, and you just buy one token. That's a short position that represents that short position. Do you kind of see that? How do you kind of see that token model, and how does that compare to your model?
So I think it's a really interesting use case. I mean, it's essentially they're creating derivatives, which are very powerful, right? Being able to offer, traders the ability to speculate is a very powerful tool. But derivatives are not really what I would call the physical or cash instruments that they represent. They're derivatives. They're basically side bets. Whereas with Compound, we're really offering the real thing. We're offering the ability to borrow the real token issued by the same smart contract token address that all tokens are administered by, where you can borrow real Ether or borrow real basic attention token, not a derivative instrument that represents it. And so we think there's a space for both. If you look at financial markets today, there's a huge space for derivatives, and there's a huge space for term loans and bonds, and there's a huge series of money markets for short-term money. I think all three of them do coexist because they have such fundamentally different use cases.
Yeah, I think that's an awesome way of putting it. I mean, we've got to realize that this is creating a global economy, and there's obviously needs to be optionality in how people interact because it's a complex economy that's being built.
Right.
That's fantastic. No, and I just wanted to reiterate our support for this project. Compound, in our opinion, is doing some really amazing things to create a sophisticated economy around crypto assets. And we're really excited to be involved, and we wish you all the best of luck going forward. I just had one comment. Was it intentional or unintentional that your white paper was exactly 9 pages, including references, which is the same as the Bitcoin white paper?
Unintentional, to be honest with you. There's a couple of versions of the white paper. Some were 8, some were 10, some were, that was the amount of space it took to really express the idea in a way that another team would be able to audit our approach. What we want is for it to be expressive enough that anyone can look at the Compound protocol we deploy and say, yes, that matches what was expressed in the white paper, but there's that level of detail, no more and no less.
It's a really good pithy white paper, and I think I like reading white papers at 9 pages. It's you've done it well.
I had a few late nights working on it.
Yeah, good. Well, thanks again, Robert. I really appreciate the time you took speaking to us, and best of luck.
Yeah, thank you, and we'll talk soon.
See you later.
Doing great stuff.
Ciao.
Great. Thanks, James.